My name's Tony Botello, President of Freedom National Bank, and welcome this afternoon to our PPP planning with GrowthLab. You should see up on the screen videos of a couple of us. You'll see Dan Gertrude and Corey Canoia. Say hello, gents, from GrowthLab. And you also see Cheryl Bond-Wegner and Chris Sherman from Freedom National Bank. Say hello, folks. So thank you. There are other Freedom folks on the call. We just have them in the background. And we welcome everyone who is signed on for today's call. This overview should last anywhere between 30 to 45 minutes, depending on question and answers. The objective today really simply is to let you know that we're here for you as best we can to assist you with your questions and try to point you in the right direction. By no stretch of the imagination are we experts in this. I think what we've all learned from this experience, starting back in mid to late March, leading right through April into early to mid-May, was that the rules were changing literally as we went along. Sometimes they were changing weekly, sometimes daily, and believe it or not, even sometimes hourly. Behind every hour, it seemed like we had a new rule to follow. So no, I can tell you nobody on the face of the earth has ever experienced this. Certainly nobody in this bank has ever experienced anything to this magnitude. I've been doing this for 35 years, and this was probably one of the most challenging periods of my career to figure out how PPP works as best we can and try to provide some guidance. So with that being said, I'd like to bring up on the screen our PowerPoint presentation. So first of all, thank you. I think before we can do anything else, it'd be remiss on me if we didn't say thank you for your business and thank you for your support to Freedom National Bank. Without our clients, we don't really serve a purpose. So we're really thankful that you believe in us and trust in us. As you all know, Freedom's commitment is really to community and small business lending. We pride ourselves in that. We are coming up close to 20 years in business. And actually today is my 9th year anniversary at the bank. So I'm waiting for a cake or flowers, but no one has sent me anything yet. So we'll wait and see. I still have some time before the end of the day is over. Oh, thank you, Tijal, for the thank you. But yeah, 9 years today. And I'd also be remiss if I didn't thank the Freedom colleagues for what I call their unwavering commitment to the bank and to the clients, especially, and I've seen this for years, by the way, but especially the last several months in face of, a pending merger. I think most of you, if you don't know, we're being acquired by another bank later on this summer. I'll speak to that in a minute. In the face of COVID, which is, unprecedented, and of course, just the economic stresses. So thank you, a big shout out to the Freedom colleagues. April was what we call PPP month. I don't think we did anything else literally at the bank other than focus on that for the entire month of April. It officially started April 3rd. I can tell you we were preparing for it as early as mid-March with a lot of uncertainties around it. And then certainly for the entire month of April leading into May, we did well, I'll get to that in a minute, but we did quite a significant amount of PPP activity. I do want to spend a moment on the Bristol County merger just briefly. That is still ongoing. It is still pending some regulatory approval. The majority of the regulators have approved it. So Bristol County is getting very much closer to making an announcement. It's not official at the moment, but at this point, we don't see anything that's going to prevent that from occurring. We are preparing for a targeted date late in July. We don't have a date set at the moment, but we're looking late July. And then if that occurs legally, there'll be what we call a conversion in late September. Briefly, what that means is if they acquire us in late July, we are legally owned by them, but our systems don't speak until late September because there's a lot of technology, a lot of security, a lot of confidentiality issues that we have to assure, and that'll happen later in the early fall, late summer. Back to PPP. In the month of April, and again, a little bit in May, we did over 200 PPP loans within a matter of a month. It came out to about $25 million in commitments and funding. Average size loan, as you can see up on the screen, was approximately 125,000. We did have many smaller ones, and we had, frankly, a couple of outliers that had much larger payrolls, but on average, it was about 125,000. So that is pretty much behind us now. I think most people know tomorrow is the last day to officially apply for PPP loan forgiveness. I'm sorry, for PPP loan funds. What we're doing now is we're entering what we call the PPP forgiveness stage, and therefore today's call. I do want to point out a couple of things. There are some outside agencies that could be very helpful in your preparation for your forgiveness application. I just put a couple up on the screen. One is obviously the SCORE Mentors, which is part of the SBA in Providence, the Small Business Administration. And I do want to remind folks, this is a Small Business Administration loan program. So they're the ones that really, with the US Treasury, worked on putting this together, putting the program, the rules, the regs in place. This is not a bank driven program. We are certainly involved. We're certainly the conduit. We're certainly part of the solution, but they're the ones that set up the program on a federal level, and we're learning as you go. But again, the SCORE Mentors is a possibility to get some questions answered. Another place out there is known as the Center for Women in Enterprise. Some of you are familiar with them. They work with small businesses, not just women, but all kinds, veterans-owned businesses, small businesses, and they also have resources, and they're affiliated as well with the USBA here in Providence. Next slide, please, Dan. And then in terms of some internal resources, and by all means, we're not experts, we're learning as we go, and we're learning with you, but Chris Sherman, Cheryl Bonn-Wegner, and Morgan Guzzi have been working quite closely on this, as you know, for some time. They were involved with the application process, with the processing of the applications, with folks behind the scenes here, and then ultimately on the documentation and ultimately getting you the funding you deserved. So shout out to these three folks. They're on the call today, and Cheryl and Chris are there. So wonderful work by all. So thanks, Chris, Cheryl, and Morgan again for your involvement. And again, they're resources to you. They may not have all the answers, but feel free to reach out to them and they'll hopefully point you in the right direction. And then the last thing, for any CPA firms that may be on the call or attorneys or other resources, welcome. We appreciate the work that you've done with your clients, with our mutual clients. We're more than happy to work with your firms, as you know. And if you can provide some guidance to your clients as well, that would be very most helpful. And for those clients out there who don't have their CPA or attorneys actively involved, feel free to refer to them or lean on them as a resource because they may have some good insight as well. All that being said, though, we have asked the folks from GrowthLab Financial Services to join us today. They've done a remarkable job. If you've been tracking them on LinkedIn or just been tracking them in general, they've been really educating people throughout Rhode Island, including professionals like CPAs and attorneys, as well as clients, both of the bank and of other financial institutions. So I want to welcome Dan Gertrudes and Corey Canoia today. They've been really super supportive of Freedom's efforts. We've leaned on them on several occasions. I put down a couple of key bullet points here. One, they're entrepreneurs. They own their own business. They run their own business. They know what it's like to be in a small business. They know the challenges around COVID. They have to practice their own social distancing. I told them to take their masks off today because I really wanted to see their smiling faces and for you to get it, recognize them. Secondly, they've worked in the corporate world. They know what big business is. They know what it's like to be working with the SBA and sometimes the challenges there. They love business. We've had them in the bank several times, talking to us, talking to our clients. We've got some mutual clients. They really enjoy dealing with the business world. And they're great listeners. I think that's most important, especially in times like these, when you need someone to lean on, someone to ask questions. These folks, Corey and Dan and the rest of their team, there are other people behind the scenes, really communicate well and have multiple points to reach them. They're just another great resource, I think.
Cool. All right. Thanks, Anthony. Yeah, we've been doing quite a few of these over the last few months. They're fun. And, now more than ever, planning is back in vogue. During good times when there's plenty of cash, plenty of liquidity for businesses. Planning tends to be one of those things you kind of do once a year, and then you throw that plan into the top right-hand drawer of your desk and sort of forget about it for another 12 months. But now more than ever, planning is critical. And you're right. Now more than ever, Anthony, now is the time to be leaning on your attorneys, to be leaning on your CPAs, to be leaning on your board of advisors. And by the way, I think one of the first things I evangelized in sort of, I would say, the second or third week of March was lean on your bankers. You know, your bankers aren't there for your quarterly covenants or your yearly debt service coverage ratio covenants. Your bankers are your friends, right? Now more than ever, you really want to have that open dialogue. Now is not the time to be putting our head in the sand. Now is the time to be transparent and open with all of your closest advisors. So thanks, Anthony. I appreciate this. So part of today, you know, we don't want to turn today into sort of a mathematics 101, because, you know, you kind of dive into the long form, especially, you know, it can get your head spinning. And of course, over the last few weeks, there's been other sort of new applications, especially the easy form, which has been is going to be another sort of lifesaver, and hopefully, yeah, big time, right? And maybe not burn so many brain cells trying to put together an application, especially for those that actually followed the rules right from day one. So, like Anthony said, you know, back in April when the CARES Act passed to today, it feels like an eternity. Like it's literally done a 180. And there were a lot of companies that stepped up and really started planning before the monies even hit their bank accounts. Unfortunately, there were also many companies that were receiving these monies and really not planning, right? And of course, the PPP Flex Act was a godsend for many of these companies that were not planning, or worse yet, really couldn't bring back the business. So I'm going to kind of let Corey talk a little bit about the PPP Flex Act, talk a little bit about the forgiveness application, and then we're going to dive into some of the, really the key here is to help you guys understand what are the key drivers, what are the 2 or 3 key drivers that you really need to stay focused on, because even though we are in the 8th inning, because of the PPP Flex Act, it's really given companies the option to go from 8 innings to 24 innings or weeks, right? So there's still some time to kind of make some modifications. And of course, many of the bank's customers, sorry, I'm gonna avoid hitting the table. Many of the bank's customers actually sent in some questions. So we'll try to weave in these questions as we go through the slides. But at the end of the day, we want this to be a Q&A session.
Yeah.
So
and any questions too, just send them into the chat channel and we'll pick it up on the end. But yeah, to your point, like even if you were one of those people that were being proactive in that planning process, the Flex Act and some of the new things that have come out, you know, as a result of some of these changes, just puts a whole, you know, curveball in this equation. So we're going to focus on the high level, kind of some of the things that you want to think about as you go forward in terms of the planning process. There's plenty of resources to get the specifics on numbers and formulas and stuff. So we're going to keep it high level for today. So the Flex Act, first of all, kind of the 3 things you need to know about with this. So now it's more so 60% of the monies must be spent on payroll. It was previously 75%. This really opens it up for things like restaurants, manufacturing facilities, other types of businesses that
may not be able to bring back all these employees.
And has had a lot of fixed costs involved with that. So that's a big player in this. Second was any of the monies that don't get forgiven, if that happens to be you. It was previously a 2-year amortization on that loan. Now it has the potential, keyword potential, to be a 5-year amortization. There's a couple of key things in there. Your bank has to, you know, agree to that. And I don't think, Anthony, you had anybody sign on after that Flex Act anyway. Right. So you're kind of all in that bucket.
You're all in the 2-year bucket unless.
Yeah, at this point, every PPP loan client of the bank is in the 2-year bucket. We have not received any requests yet to go to 5 years. I think partly because I think people want to see if they're going to be successful in getting their loan forgiven. If that happens, obviously there's no reason to ask for 5 years if your loan gets forgiven.
Yes,
that's right.
And I think the lastly, kind of, you know, I think the SBA sent out a safety net And that FTE, that full-time employee restoration, had a little bit of an extension on that. So that we'll get into that more. But if you weren't able to bring back all of those employees for a variety of reasons, that doesn't mean you're automatically disqualified for forgiveness. And we'll go into that later.
But the key here is 2 to 5 years, from 75% to 60%, and from 8 weeks with the option to go to 24 weeks, right?
Yes.
So now the forgiveness application, there are 2 applications. There's a very long form application, which we do reference the safe harbor. We'll touch on that. The safe harbor will have your head spinning, so we're just going to lightly touch on that. And but the big win here is really the easy application. And so the team here, Corey and the team, developed a decision tree that sort of helps you take you through the journey of whether or not you would qualify for the easy versus the long. And by the way, if anybody has any questions in real time, feel free to send them, and John will be shooting us a message in real time with those questions. And then the last piece here.
Dan, I'm not sure if you saw a question just pop up, but one of interest. The client wanted to know if you could speak a little bit more about the option of going from 8 weeks to 24 weeks. What does that generally mean?
We totally will go there. We like to have that conversation vis-a-vis a scenario plan, right? In other words, here's my 8-week scenario plan. Here's my 24-week scenario plan. What's the difference? How does that look? Am I able to restore my FTEs by that 24th week versus the 8th week? Did I essentially deplete, if you will, my PPP loan in 8 weeks versus 24 weeks? Right. At the end of the day, it's mathematics. It's 8 weeks, 24 weeks, and then the safe harbor for the December 31st restoration. So can't just answer that in isolation. Let's kind of go through this, and I promise you we will jump into that question.
Thank you.
Cool. So things to consider. We already touched on a few of these, but Corey, you want to kind of?
So these are 3 things. We'll get into more of them, but obviously what you just said, Tony, determine whether you're using the 8-week or 24-week period. That will come we'll go into more detail on the decision tree after that. You'll understand more. But it's kind of 2 things at a high level here. One is obviously cash impact. Do you have the funds to keep these employees, right? If you are a restaurant, or say you're a business that you just kind of bring them back for that 8-week period, and then you're going to let them go after that, furlough them again. If you don't have the cash to bring them for the 24 weeks, most likely, without going into the specifics, you're probably going to stick to the 8-week period.
Or attempt the safe harbor.
On the flip side, if you want more time to bring back some employees, if you are trying to incur more expenses to maximize the forgiveness, you may end up going with that 24-week period. It's really not a binary yes or no question, but we will get into that.
Right. So the key here is the 8 weeks versus the 24 weeks. The 8 weeks sort of forced everybody's hand into making essentially a binary decision. One, to the detriment of my business strategy, do I just bring everybody back in to maximize the forgiveness? Well, guess what? The 24-week unfortunately came in 6 weeks later. That's actually giving you the option to say, hey, you don't need to bring everybody back right away so quickly. Now you've got 24 weeks, not just to deplete the funds, in other words, maximize the PPP loan, but you also have 24 weeks to restore. And oh, by the way, if you weren't able to restore within the 24 weeks, well, you'll actually be able to apply for a safe harbor, which means you technically can't apply for the PPP loan forgiveness until December 31st, where you can begin, or anytime in between the 24 weeks and December 31st. That shows the SBA that you're able to restore some of that or all of your employees. So again, it's not just do I go with 8 or 24? You got to have the bigger picture. So we're going to kind of walk you through the key drivers of the application.
Dan, quick question here from me. Hindsight's 2020. Knowing what we know today, would have it made more sense if the SBA and the Treasury came out in the beginning and said it's a 24-week decision process versus 8 to 24? Did that confuse people? Did that make it a little bit more of a challenge, you think?
I think up front it made sense, right? Because the loan amount was based on 2.5 times your average monthly payroll. So 8 weeks kind of it was 8 weeks should have made sense in that point. I think what they found, the SBA found, was there was those businesses that we referenced, like the restaurants or manufacturing, where they couldn't bring them back for a variety of reasons. And so
It could be social distancing, or it could be the revenue wasn't there.
their industry is wiped out
Right.
to a degree.
It could be I wanted to preserve cash and
Mhm.
not get the loan forgiven. So there were other options there. There is confusion between the 8 weeks and the 24 weeks. We did just get another question, Anthony. I just want to quickly address. Unfortunately, the answer is going to be the same. What is the criteria for qualifying for the easy application? Just give me one more second, and I'm going to have you. We're going to walk you through a decision tree. So, determine which forgiveness application to use. So there are two basic questions, sort of the most impactful questions.
Yep.
One is, have you reduced any employees' wages or hours by 25%? And the other one is, were you restricted in bringing employees back due to social distancing rules? Again, we're going to have a decision tree to kind of walk you through that. And then
Great.
the last thing to consider
is just simply, once you get through these pieces, it's actually keeping those records, right? There's no formal guidance in terms of what you have to support your documents with. We can go on a limb and say it's probably your payroll stubs, vendor bills, bank statements, 940s, 941s. But, our thought process is just be proactive, start gathering that information today, because frankly, we just don't know what specifics they're going to ask for.
And there is guidance around how to record these transactions on your general ledger. We started advocating right even before the AICPA came out in creating classes. So if you're on QuickBooks or Xero, there are ways to create classes. If you haven't started that, maybe you should. Otherwise, it's okay. I know there are some general ledgers that are not amenable to like creating classes. So keeping good records, 941s, monthly payrolls. Remember, this has to be at the employee level, and we're going to kind of pop into the application in just a second.
Dan, one other quick comment, Dan, just real quick. I know some clients of ours established separate accounts. They didn't want to commingle the money. So any PPP loan proceeds they receive from the bank, they either establish a new checking or savings account, and then they were advised to do that by whoever at the time, just to keep the money separate and apart from their normal operating expenses.
I think that was a great idea. That's another thing that we started talking about from day one, is keep the money separate. I get it, cash is fungible, but when you can keep a little bit of a separation and show the funds being transferred to cover payroll, because remember 2 months ago, we didn't know what was really going to happen. So again, it's one of those, let's be proactive. And of course, if you didn't, it probably doesn't make sense to go out and start a new bank account to put the rest of the money in there. Anthony, there was another question. We just finished using all of our PPP monies. So we went past the 8 weeks, but definitely don't need the 24 weeks. Does that change our situation? It probably doesn't, and you should apply for forgiveness at the end of the 8 weeks. But I'll let Anthony address that question, because that is another question that was sent in early on this week. So Anthony, do you want to kind of talk a little bit about what the bank is doing to be proactive around receiving applications?
Sure. At this point, we have not accepted any applications. We plan on doing so in the very near future. Part of the challenge is that we want to make sure that the SBA is okay with us accepting applications, number one. And number two, and this is very important to understand behind the scenes, and I know the banks in general, not just Freedom, but banks in general, have up to 60 days to work with the SBA on decisioning if all or a portion of the loan is going to be forgiven. The challenge we have right now is we don't have any guidance, and Cheryl, correct me if I'm wrong, so feel free to jump in. We don't have any guidance from the SBA at this moment in terms of where to send the forgiveness application. So for example, if someone's out there right now and they're ready to apply, and they apply, say, July 1st, I'm just making this up, and we accept your application, we have 60 days to decision that application. So in effect, we have till September 1st, more or less, to decision it. Part of the challenge we're faced with, and I know every other bank's faced with, is that we don't have direction or guidance where to send in the forgiveness application. Because keep in mind, the bank is not the one approving the forgiveness application, or what we're doing is we're reviewing it. We're making a recommendation, assuming that you have all your data in place. And then the SBA is ultimately the one deciding whether you're forgiven or not. So Cheryl, is that correct? At this point, we don't have any guidance as to where to send the applications?
That's correct. As of today, we do not have that.
Right.
Yep.
So again, not that we don't want to take applications, we want to make sure that as soon as we get them, we can address them and then we can forward them on so the SBA can decision them. So I would just ask you out there for the moment, just be patient. We're hoping within the next, week to 10 days, we're going to get some clarity here. We do know tomorrow is the last day to apply. So we're hoping that post that, the SBA will provide us some guidance in terms of where to send the forgiveness applications. But we haven't forgotten you, and that's certainly why we're doing this call today. But as soon as the spigot's open, we'll let you know to apply. And then certainly we'll have 60 days to submit our recommendation to the SBA. By the way, once we submit to the SBA, it doesn't mean they're going to decision it in 60 days. Cheryl, how much time does the SBA have once we submit our recommendation?
If I remember correctly, I believe, do you know, Chris, off the top of your head?
I believe it's 90 days after
Yes, I
we
think it's
submit
90
it. So,
days.
so 60 for us, 90 for them, so a total of 150.
All right, so just keep that in mind, folks out there. I know many of you are anxious and want to get your forgiveness applications in. We don't blame you. We want to support that. But we have up to 60 days to recommend something, and then the SBA has another 90 days to decision it. So this could go on for several months before you hear back. So I just want to forewarn you. Our objective is not to sit on it for 60 days. We certainly want to get it, to the SBA as soon as we can, but we also want to make sure that you've done a good job up front applying and that all the data that we need that Dan referred to is in hand. Dan, back to you.
Right. So Corey, let's switch to the next slide. But Anthony, before I do let you go, there was another question around will Freedom National Bank have an online version of the long form and or easy form?
Chris, you want to take a stab at that, Chris?
Yeah, as of right now, we don't really have the resources or like power to do an online forgiveness application. So as of this moment, you have to do the paper one, unfortunately.
And Chris, where can they get the paper one from?
So it's on the SBA website or the Treasury website. Really, if you just Google like SBA PPP forgiveness application, it's everywhere. So look for like an SBA website or a Treasury website, and that'll lead you to the right place. I don't know the exact website off the top of my head, though. I'll look it up and I'll put it in the chat.
Okay, great. Thank you. Please do. Thank you.
Yeah, and I think the website that we have up here also has a link to the SBA. So here's where, this slide is going to answer a few questions that are coming in real time, and of course questions that came in over the last week, guys. So which PPP forgiveness application can I use? The long form is daunting. I think it's like, I don't know, 10 pages or so, and you need detailed employee by employee, week by week payroll information. So think about it. If you have 20 employees and you're going to go for the 24 weeks, yeah, that's a lot of information. So with that said, they did, the SBA did release about 2 weeks ago the easy form. It is easy, but there are really things that we need to consider. So we've created this little flow chart or decision tree. Again, it's not sequential, but it's kind of good enough to help you answer the question, can I go with a short or do I really have to go with a long?
No, number one, top level filter, are you self-employed, independent contractor, or sole proprietor? If the answer is yes, automatically just go to the easy form. You don't have to worry about the rest. If you are not, which is probably the majority of you, the number one high level question is, did you reduce salaries or the hourly rate by more than 25% for any of your employees?
Any employee. So explain what that means. So if I'm making $20 an hour and you cut my pay to $14 an hour for whatever reason,
you automatically have to use a long form. That is outside of owners.
This is dollars. This is not hours. This is dollars.
Yep. And so if you didn't, were you operating at reduced levels during the covered period due to social distancing and related guidelines? There's kind of that clause that they left in there, right? There's many businesses here that they were a restaurant. They couldn't open up. They were A cafe, they couldn't serve customers, right? For a variety of reasons. But if that is you and you are at reduction due to that, you can go to the easy form.
So let's pause here for a second. So this one, guys, I will leave it to the lawyers, but if I were advising a small business owner or advising my banker friends here, I would say that cafe that relies on foot traffic from something outside of its control, it could be a train station, it could be an airport, does that fall into this easy go sort of provision? I would argue yes, probably. But again, that one, like Anthony said, the bank isn't making the decision, the SBA is making the decision. But that's a critical one because there are a lot of companies that did not reduce their employees' hourly pay or salaries, but had to lay off their employees because their customers, the foot traffic wasn't there for other reasons around them. Okay, so that's a critical one, the social distancing one. And the last thing I'll add, you think of a kitchen in a restaurant. It's a tight sort of environment. You've got 6 individuals working the line, the prep line. Can you really have everybody working in the same environment and staying 6 feet apart? The answer is probably no. Okay, so what if the answer is no?
So if the answer is no, well, did you reduce any number of employees or the average number of hours paid? And this is in comparison to February 15th as the baseline. Why February 15th? That's just the date that the SBA put out there. So if you did reduce the core number of employees or the average number of hours paid, then it goes to the next question. Was your reduction due to the following? Were you not able to bring them back because they did not want to come back, because they got sick, whether they just refused to, they wanted to stay on unemployment, or you just couldn't find labor? That's kind of another out for many employers where if you tried and you made the conscious effort to bring your team back and you just simply could not because of they just didn't want to or they couldn't, you are not going to be on the hook for them, and you are able to still use that easy application.
Right, but there's a lot of things that go with that. We've talked about it. So you almost have to follow the sequence here. You can't just jump to the last one, because if you did reduce your employees' rate or salary by 25%,
automatically long.
You can't use that. You can't use that any of this stuff as an out.
Yeah.
So Anthony, we just got another question, and I believe I tried to address it because it looks familiar. We shut down for 6 weeks due to clients not wanting to come in due to their safety concerns. We were not mandated to close. We then brought back 3/4 of our team. How do I answer questions 2 and 3? So again, if I were advising, and this is one I would recommend, talk to your banking relationship person. If you were shut down for 6 weeks, brought people back, and the reason why you couldn't bring back the whole team was for social distancing reasons, but you did not reduce their hourly pay, did not reduce their salary, might actually qualify to go with the easy application.
And there's a couple of questions I wanted to put out there. I've been tracking the Q&A section. If you don't mind, I got a couple anonymous questions. One is there any way you could briefly explain the EID grant and how that fits into the forgiveness formula?
Sure, that's an easy one. So let's say you took out your PPP loan was $200,000. After you did your calculation, you were able to get $200,000 forgiven. Unfortunately, you need to reduce that $200,000 by the $10,000 if that's what you receive from the EIDL grant advance, and therefore your forgiveness will be $190,000.
So basically, the grant is netted out against your forgiveness, is what I'm hearing. Great.
Not the EIDL loan, but the component of the grant advance.
Understood. A second question, can you apply for forgiveness between the 8th and the 24 weeks? Do you have to wait for the full 24 weeks?
Good question. Our take is you're going to end up depleting or call it that break even between PPP loan and PPP loan forgiven, right? That break even. It could happen in the 10th week. It could happen in the 15th week. But our understanding is you still have to wait until the 24th week, because here's the caveat, Anthony. If I were in the SBA shoes, and again, I'm so full disclosure here, right? If I were in their shoes, I want to make sure that you're going to maintain that head count for the full 24 weeks. That's why we gave you a bone, if you will, right?
Gotcha. Last question for now. Can nonprofits use the easy form?
To my knowledge, it's as long as they, it's still a function of these questions that we have up on the screen. Did you reduce the number of employees? Were you operating at reduced levels, and so on and so forth? The only one that's an automatic, yes, you can use the easy, is if you're a self-employed independent contractor or a sole proprietor. So,
which is great. Great.
Yeah, I think the basis for the question is because nonprofits don't necessarily technically have ownership, so they weren't sure. But what I'm hearing you say is if they don't hit any of those other criteria, it looks like they could fall back into the easy application.
to our knowledge, yes.
Okay. Always a disclaimer. That's good, Corey.
Commercially reasonable. Yes. So anyways, the easy form here is going to be great for anybody who's a 1099. Think about hairdressers, contractors, people who are, plumbers. This is a great, this is the best. Now that said, we do have a lot of customers that are going to go right to the easy go. We've actually laid out a couple of scenarios. And
the easy, I'll just say this last thing, the easy form versus the long form, there's no difference in terms of the ruling or how much forgiveness you can get. It's simply just a function of how long the form is and what's easier for you. So you still play by the same rules. And so I'm just going to put that out there as well.
Yep. Okay.
Hey, one last question. I'm sorry, before you move on to the key drivers. One of our clients sent in a chat saying they shut down for 6 weeks due to clients not wanting to come in due to their safety concerns. Sounds like they may be a retailer. We were not mandated to close. However, they did close, and now they brought back 3/4 of their team. And they wanted to know, how do they answer questions 2 and 3, I think from the prior slide.
Yeah, so I actually did address that question. And I believe what my recommendation is, we need a little bit more information, Anthony.
Okay.
But my immediate reaction is, as long as that business owner did not reduce their employees' wages or salaries by 25%, and their business was affected due to social distancing, if that business was a cafe or a restaurant, for example, you could probably make the argument that you're not able to bring everybody back due to the close proximity of working behind a cafe counter, or back in the actual restaurant, right? Having people so close, I would say you probably do qualify for the easier.
Or even, I'll give another example, Anthony, is if it is, say, a retail shop, right? Maybe the customers didn't want to come in because of social distancing requirements as well. So I think there's a couple ways to kind of go down that path.
One last question, I promise, and then we'll move on to the key drivers. This is again from a client. Are we required to have the exact same number of employees by the 24th week? We have 14 total during normal times, but right now we're down 1.5 persons, and I don't see them being replaced by the end of the year.
That's a great question, and we're going to start answering that question right now.
Go for it.
Cool. So one of the things I promised Anthony was not to make this a mathematics 101 class, to try to keep it simple. So as I step back and I ask myself, what are the things that I control in this application? What decisions, right? What are the 2 key drivers that really are going to impact 80% of the outcome? And here are the 2: payroll costs and this thing called an FTE Reduction Quotient. And I promised Anthony I wouldn't use that word, but I have to use it because that line 7 is in essence the where small businesses, and I use this word lightly, but that is where you get penalized, if you will, by reducing your FTE count, okay? So let's start with the top. So this is the output of the loan forgiveness application. And there, behind the scenes, there is a Schedule A, and there's a Table 1 and a Table 2, okay? Yes, and then there are other tables that can get your head spinning, because I go back to, you need the underlying payroll data by employee by week, whether it's 8 weeks or 24 weeks. So line 1, this is really like the cusp of the forgiveness. This is your total payroll costs. And this is really a function of all cash compensations for business owners, for employees, and non-cash payroll compensation, such as health insurance, retirement, state and local payroll taxes. So all of this stuff comes from another table on another part of the application. But I'm focusing on this one because this is what's really going to drive most of the forgiveness. And of course, now we know that we can use up to 60% of the total forgivable amount for payroll, and allowing up to 40% to be used for other things. So things to consider: cash compensation for employees who earned under 100,000 or who were not employees in 2019. And then in table 2, which will probably not apply to most businesses, and if it does, you're probably talking, you know, the 80-20 rule. But we're seeing most businesses there's not going to be a heavy concentration in table 2. But this is cash compensations for employees who earned, on average, more than 100,000 per for 2019. The non-cash compensation stuff are the health insurance, the retirement, the state and local payroll taxes. And then finally, what's included in line 1 is, of course, your compensation, right? That's actually delineated from your employees. That's your line 1. Line 2, 3, 4 is self-explanatory, but I want to jump right to line 7. Because here's an example, Anthony. You have a company that on average has, call it 1.2 million in, call it annual compensation. And they probably got a PPP loan for about $250,000. But if that company was not able to actually bring back all of their employees, and they brought back only 50% of their employees, you are essentially going to reduce whatever you added up for total comp, plus those one-off stuff like business mortgage interest, rent, utilities. You actually reduce that amount by 50%. And that's a huge nut, right? That's a big reduction. That is where you get penalized. So I want to spend a little bit of time understanding this FTE reduction quotient, because believe it or not, you can actually control it to a certain extent. And oh, by the way, there's great news. There's also a way out, and it's called a safe harbor. So line 7, you've got this reference period, you've got the covered period. The reference period is sort of like the baseline, the starting point. This is what you get compared to, if you will. So the SBA has given small businesses 2 options. And this is great, by the way, because there are a lot of companies that actually were walking into 2020 already thinking like right-sizing the business, reducing headcount, et cetera. And then, of course, there are other businesses that are like seasonality businesses. If my business is more prone to like, you know, expansion during holiday season, and then come January 1, I'm laying everybody off. Well, I don't want to be compared to like, you know, 2019, right? So the average FTE during reference period, you can use 2. 1, the same time last year, which is February 15th through June 30th, 2019. This is average FTE during the reference period. The second is January 1st of this year to right before COVID hit, February 29th. Now, I know everybody's asking, well, how do I calculate an FTE? So let me just quickly jump around. An FTE, there are 2 ways, and you have to maintain consistency. You can either use the 1 FTE for anybody who's 40 hours or more, hopefully not too much more per week, or one FTE for anyone who works 40 hours, and anybody less than 40 hours, you give them a 0.5. That's one option. We actually think that 80% of most of these companies that are applying are going to use the continuous option, which is essentially using 40 as the denominator. In other words, if I work 20 hours, 20 divided by 40 is 0.5. I'm a 0.5 FTE. But let's say I'm a 30-hour employee. Well, 30 divided by 40 would be a 0.75. You're almost better off using, and by the way, you should compare the 2. You're most better off using the continuous range, because that way it's going to help you add up quicker. All right, because many times I reduce my headcount by my part-time people, right? Because many companies look at their part-time as sort of gap fillers to their full-time. Depends on the business you're in. But point being, that's how you can calculate FTEs and then calculate your reference period. Secondly, now you need to calculate your average FTE during your covered period. And now you've got two options. I've got my 8 weeks and my 24 weeks. You can't use 16 weeks. You can't use 12 weeks. You've got to use 8 or 24. That's our understanding right now. And it totally makes sense in my mind, right? Because the purpose of the PPP loan was to bring employees back. So I'm going to pause there because in essence, the FTE reduction quotient is the function of covered period divided by reference period. A good example is if I had 40 employees on average between January 1st and February 29th, but during my covered period, I only had, say, 20 employees. Well, guess what? My quotient is 50.5, which is 50%. And that's not going to bode too well. But let's not forget, you have the 24 weeks now to eat through that, so that could help. That said, there is a way out, and it's a safe harbor. I'm not going to get into too much detail, but it essentially allows you to, it buys you some time. If you can show that you can bring your average FTE back to February 15th, 2020 by December 31st, 2020, which answers one of our attendees' questions, you got to bring it back. Like you can't kind of get close. You got to bring it all the way back. You get to actually use 1 on your long form, which means your total amount, whether it's 8 weeks or 24 weeks, you get it 100% potentially forgivable.
So if I'm that client who's down 1.5 FTEs from my normal of 14, and I'm down now to 12.5, I've got till 12/31/20, end of this year, to bring them back.
You do, Anthony, but I would almost recommend, because remember, go back to the time frame. The bank has 60 days. The SBA has 90 days. Oh my God, that is a tax planning nightmare. Remember, you need to get this. I mean, if you're not planning for your tax, right now, we're not even talking about like business planning and like strategy and cash planning. We're talking about tax planning. So you've got a few things that you want to work with your CPA or your lawyer with. So there are a few moving pieces. I would say to that your customer that just brought up that question, I would say, hey, maybe don't go for the safe harbor to go capture that extra FTE.
Mm-hmm. Maybe look at the 24
Look
weeks.
at the 24 weeks, take the hit on the quotient reduction, because you may actually end up finding out your what's called your modified total, which is line 8. Your line 8 may actually be higher than your actual PPP loan, so you're automatically going to get 100% forgiven.
Boy, it sounds like to me, and this may sound like a commercial for GrowthLabs, but I'd probably want to call you guys if I had that type of question.
Yeah, it's painful. We have our analysts working quite a bit for some of our customers to figure out the 8 weeks, 24 weeks, and safe harbor.
Yeah, Dan, on a serious note, and this has all been serious, but there is a likelihood out there, and I know it's it's a case by case basis, that not everyone's going to get 100% forgiveness, right? We know that. That's just the way the real world works. So if there's clients out there thinking about that right now on this call, is part of the planning around tax planning and strategy, it's not all about, oh my goodness, I applied for a $100,000 PPP loan through Freedom National Bank, through the SBA, and then in 150 days from now, the SBA says, sorry, you're only going to get 80,000 forgiven and you owe 20,000 back. I mean, there's more than just that exercise, correct?
There is. And there's the 2-year amortization versus the 5-year amortization. There are sort of, has my business fundamentally changed in post-COVID? There's a lot of moving pieces, Anthony. That said, if we're talking, it depends what the amount is, right? It comes down to material.
Right.
Yeah.
Right. Good.
So
Thank
yes,
you.
there's a lot of considerations. There's a lot of moving pieces. And to boot, you're in like the middle of a 24-inning game right now. And,
Right.
the rules kind of change. And so we did put together a couple of little tight scenarios, like very general scenarios on the next slide.
While you're doing that, Dan, I'm going to answer a question myself that just came up from one of our clients. When can businesses start sending their PPP grant applications to Freedom National Bank? I would ask you all out there just to hold off a little bit. I wish I could be a little more definitive, but at least sit tight for another week to 10 days. Let's get through this application period. Let's get this 8 weeks behind us. And we'll hopefully waiting for more guidance on from the SBA in terms of where we send the applications in. Keep in mind, we're making recommendations based on the data you're providing. The SBA is the one decisioning whether your application is forgiven in full or in part or at all. So I know you're anxious to get your application in, sit tight. I am asking folks just to give it another week to 10 days. Hopefully by that point, we've got more clarity. Back to you, Dan and Corey.
Yeah, one other thing I would, while we're waiting for the banks and the SBA to figure out what the deadline is for the application, I would say use this time. We're coming to the end of the first half of 2020. Start thinking about what the second half of 2020 could look like. Start thinking about what 2021 looks like. Lay out a plan. You don't have to go into the nth derivative of the drivers of your business. Just lay out what you feel like your hiring, your revenue, what your cash situation is going to look like. That's your first thing I would do. The second thing I would do is sit down with your tax professional, sit down with your CPA, and start understanding what could the impact to your tax situation look like. Our understanding as of today is that the taxable event happens on the day that you receive that grant, that the approval for the grant. And that can mean a lot of different things for a lot of different people.
We've had customers that have told us that they don't even want to apply for forgiveness.
Not this year.
Not this year, because of the tax implications of it. So it's completely one-off. To Dan's point, use this time to kind of play out both scenarios too. If you were under the assumption that you can only use that 8-week period, take this time now to take a step back, run through the scenarios. We'll send you these slides, but at the top and that link, we have this calculator that you saw on the last slide that will kind of run you through it, see what it puts out for you, see what that scenario looks like in terms of how much you can get forgiven. Kind of take it from there, because maybe you may find yourself, even though you reduce by 50% employees, that quotient by 0.5, you may still be able to get it 100% forgiven, right? So play that out.
It depends on where you are in your business cycle. So here are 3 very high-level, simple scenarios, and I hope one of these, the audience here says, oh yeah, I kind of feel like that. So scenario number 1 is really no change in payroll or FTE count. As a matter of fact, I actually found an opportunity to grow during the COVID-19 pandemic. Great, so that's scenario number 1. Scenario number 2, my payroll, my FTE count, yeah, it was reduced. However, I was able to bring it back at least to the reference period levels during either the covered period, or by December 31st, 2020. The key is for the safe harbor, it needs to be to the same level as of February 15th. So that's scenario number 2. And by the way, it doesn't have to go all the way up, but pretty close enough that you're almost running at like 90% of what you were prior.
And I'll also add one other thing. We've had a lot of questions around, does it have to be that same employee? No. If you have one employee that leaves and they don't want to come back, you can by all means bring on a new employee, have them just as a replacement. It could even be a different role, right? Maybe your business shifted a bit. If you're a restaurant, you may not have that server, that hostess.
You may have a driver.
You may have a driver, right? They can offset each other, so it doesn't have to be the same.
Right. And the third scenario is those companies that the payroll and FTE count was severely reduced and will remain below the reference period levels for months to come. So things to kind of think about, and this should sort of, hopefully this helps us sort of come full circle, if you will. The first scenario is you're probably going to get 100% of it forgivable, and you can probably use the easy forgiveness application, especially if you went through that flow chart or that decision tree and you answered, well, I guess I don't know which way, but you know what I mean. The outcome was easy. The second scenario is, you're probably, you're probably going to get 100% forgiven due to the 24-week covered period. Even if you didn't bring all of your employees back because of the 60/40 rule, yeah, chances are, let's face it, like that's 24 weeks, not 8 weeks. You go from 2 months to 4 months, like that adds up quickly. 4 months worth of rent, 4 months worth of mortgage and utilities, etc. Even if you didn't bring it, I've seen situations where, payroll is essentially half of what it was pre-COVID, but yet they're going to get 100% forgiven because of all of the other stuff. So you're probably going to be okay. I got to tell you, this whole PPP Flex Act has been a lifeline for businesses because Anthony and I had private conversations during the initial CARES Act, and I said, boy, this is starting to smell like 2008 again, 2009. PPP Flex Act is a lifeline for a lot of these companies.
I think the SBA wants people to get this forgiven because if everyone gets left with that loan, that can be a big impact to just cash flow for these small businesses. So
Dan and Corey, if I could just interject really brief, one other question came up. It's a follow-up to a prior one. It's really more directed, I think, to the bank, but I'll throw it out to everybody. It says, how can we ensure that the forgiveness application is finally approved this calendar year? First of all, let me just, I think Dan and Corey have done a great job indicating that there's a high probability that the SBA wants to forgive all these loans, and I concur with them. However, full disclaimer, the bank is not the one approving your forgiveness. We're making a recommendation based on the data in the application. The SBA is the one that's going to decision whether you're forgiven or not. And a follow-up question as part of the series of these questions here, we are right at the 6-month mark. There will be up to 2 months at Freedom and another 3 months at SBA, and we cannot submit the application yet. That may sound true, but let me tell you this. Our goal, as soon as we get clarity from the SBA, and hopefully it's soon, is to send out an email to all our 200 applicants, asking them for those who do want to apply now. And we heard from Dan and Corey earlier, some people don't want to apply this year. It behooves them to wait to December 31st. But for those who want to apply this year, we're going to accept applications shortly. And when we do, we're not going to sit on them for 2 months. We're going to review them. Hopefully the application's in good order. All the data support's there. Hopefully it's the easy application, which will make it a lot easier. And then we'll submit that to the SBA. But be mindful of one thing. The SBA has not provided us guidance, and I mentioned this earlier, where to send the recommendation into. So even though we may be able to control the 2-month period, and we will, and our goal is to get it done as quickly as possible, but the SBA hasn't given us guidance yet. So I just want to give you that disclosure there.
Cool. And Anthony, of course, it's coming on 2 o'clock, and looks like we got 2 or 3 more questions.
Sure.
I'm gonna just read a couple of these out. Do you want to let business owners know that not all payroll taxes are forgivable? So be careful when calculating how much of your PPP funds have actually been used. That's a good point. So to be clear, it is your state payroll taxes. So that is what's included in the non-cash compensation.
on top of benefits and
Yes.
whatnot.
Yep. Do the same rules apply if all employees are part-time before COVID? Do the same rules apply if all employees are part-time before COVID? No one's hours were reduced, and in one case, an employee was overpaid, having not been able to log the same number of hours in the early days. Am I thinking that I still had to pay her the average from the payroll documents used to obtain the loan? Well,
So I'd say yes, because it doesn't matter if you are part-time employees or full-time, because when you get to that FTE quotient, it's going to end up being the same. As long as you had the same employees, they're both part-time before and they're both part-time after, or if they're part-time before and full-time after, your quotient's going to be higher than 1.
the only caveat I would say is,
The overpayment.
yeah, that one I can't address this quickly, but the only other caveat to what you just said would be the 0.5 FTEs and 1 FTE versus the range of FTEs, right?
Yep.
So if there's one thing that I would take a look at, it depends on your business. If you have the majority of your part-time employees working less than 15 or 20 hours, I forget what the break even, we calculated it, we geeked out to this. If your part-time employees tend to be less than 20 hours, then you actually might want to use the 0.5 and 1 FTE calculation
Versus the actual.
as a percentage of 40 hours. That was a lot.
Dan and Corey, I know we're wrapping up against the hour, so I just want to kind of wrap this up. I know there may be a couple of questions still out there. We are recording this. We do have the questions either in chat or Q&A, and we'll certainly get you some answers. But I do want to kind of wrap it up. So unless there's any parting last minute advice, Dan or Corey at this point, or guidance, otherwise, I think the last screen is very important. Let's talk. If you're not sure, if you're still a little confused, a little anxious, here's the website, here's the phone number, there's the email for the folks at GrowthLab. They're a tremendous resource. You could see them in action today. I think you know what they're talking about. And again, there's no clear one answer for everybody. Sometimes it depends. Sometimes it's strategy. Sometimes it's tax planning. Some people want to apply immediately. I get that sense today. Some people may not want to apply till the end, or it behooves them to wait the 24 weeks. It's really on a case-by-case basis. So I want to thank Dan and Corey. I don't know if you guys have any last minute. You want to say one last thing before I close this up?
No, we're good. Appreciate everything you guys do for our customers too.
Yep.
So thank you.
Thank you. So thank you, everyone. Chris, Cheryl, John, I know you're behind the scenes. And again, thank you for all the clients on the call today, as well as all the Freedom colleagues. And if you still have a question or two, you know who the resources are. And this will be sent out. This PowerPoint will be sent out so you can look at it in the recorded version. And we want to just thank you. So thank you for joining us today. And hopefully this served a good purpose. And we will get back to folks as soon as we start taking forgiveness applications, which I said hopefully will be very soon.